Hi, I'm Natalie Brunell for Bitcoin Magazine, and here are some of the latest headlines we're tracking. First, U.S. bank regulators are exploring ways for traditional banks to own Bitcoin. The chairman of the Federal Deposit Insurance Corporation, also known as the FDIC, said that a team of U.S. bank regulators is trying to provide a more straightforward path for U.S. banks to engage with and hold Bitcoin. FDIC Chair Jelena McWilliams told Reuters in an interview this week that those regulators are working on a more precise set of rules for banks interested in engaging with both Bitcoin and other cryptocurrencies. Now, that would clarify how U.S. banks could custody Bitcoin to facilitate trading for their clients, use it as collateral for loans, and even hold it on their balance sheets. In that interview, McWilliams said, quote, "I think that we need to allow banks in this space while appropriately managing and mitigating risk. If we don't bring this activity inside the banks, it is going to develop outside of the banks. The federal regulators won't be able to regulate it." Now, the FDIC is one of three leading U.S. bank regulators. The other two are, of course, the Fed, the Federal Reserve, and the OCC, the Office of the Controller of the Currency. Now, you may recall back in May, Fed Vice Chair of Supervision, Randall Quarles, said that these three agencies were working on a sprint for cryptocurrency regulation. Now, if the task force moves forward to approve a clear path for U.S. banks to hold Bitcoin, it opens up a whole new suite of offerings for customers. For example, a Bitcoin holder who faces unexpected fiat expenses could potentially loan their Bitcoin through their usual bank instead of coordinating multiple accounts. But I think the even bigger news is this opens up the opportunity for traditional U.S. banks to hold Bitcoin, a scarce asset, on their balance sheets. And that has the power to counteract the huge amounts of debt these institutions issue. Our beloved Hornet Lord Michael Saylor responded to the Reuters article on Twitter. He made a pretty bullish point saying, quote, "When large U.S. banks are able to hold Bitcoin on their balance sheets, everyone will want to buy it. No one will want to sell it, and you won't be able to afford it." Now, although this development from the FDIC paves the way for easier mainstream adoption of Bitcoin, which we're all very excited about, users are still economically incentivized to learn and custody their own coins. All right, here's another headline we're following. Tampa Bay Buccaneers star quarterback Tom Brady, who we're so proud has laser eyes on Twitter, is giving a fan one Bitcoin in exchange for his 600th career touchdown ball. That's right, it was apparently given away on accident, and now they're asking the fan for it back. But hey, he gets a Bitcoin. Brady threw the record-setting touchdown last Sunday, and no NFL player has ever thrown 600 touchdowns. But the wide receiver who made the pass, Mike Evans, didn't know it was record-setting for Brady, so he gave that ball to a fan in the stands. Now, after the team realized the importance of the ball, a TV broadcast caught Buccaneers officials actually negotiating with the fan to get it back. Now, Byron Kennedy is the name of the fan who got the ball, and he's going to get a lot in exchange for giving it back. He's going to get 2 Brady signed jerseys, a signed helmet, a signed Evans jersey, and his game cleats, $1,000 worth of store credit at the Buccaneers team store, season tickets for 2 seasons. Oh, and yeah, 1 Bitcoin. Brady actually tweeted out, quote, "Hey, FTX official, let's make a trade. Let's get this guy a Bitcoin." Now, if you recall, Brady took an equity stake in cryptocurrency exchange FTX earlier this year. So based on that tweet, it sounds like the exchange might be the one contributing the 1 Bitcoin to the lucky fan. Let's just hope he hodls it. Those are the latest headlines. For more, head to bitcoinmagazine.com.
Yep.